necessarily go away, but we're watching how this White House reacts when it comes to potentially reducing those sector-specific tariffs. Of course, the 25% tariff in place against steel and aluminum and 25% against autos.
All right, Tyler, we want to get to Lizzie Burden right now in London. And from a UK perspective, Lizzie, you know, if I run an ECTR function on the Bloomberg, ECTR Go is a great way to look at goods trade. And if I put the UK in the box up there, the United States is the most important single nation that the UK trades with, right? I know the EU is a big bloc, but how does this look from the perspective of His Majesty's government?
Well, it's the biggest individual nation, but as you suggest, the EU is twice the size when it comes to the relative scale as a trading partner, and that's got political consequences. The UK needs to balance those relationships. Tyler points to some of the potential things that could be on the table here: agriculture and digital services. The closer the UK cozies up to Donald Trump, the less room for manoeuvre it has with Brussels. And of course, we've got that UK-EU summit coming up later this month. That is a relationship that they really need to tend as well. But look, isn't this a difference from when Barack Obama said post-Brexit that the UK was going to be back of the queue when it came to a US trade deal? Now, Keir Starmer's made the UK front of the queue, which surely vindicates this softly approach he's been taking to Donald Trump. But we've got to see what the terms of this are. That's the political significance. Economically, really, it doesn't do much to move the needle for the UK. We were hearing from the Bank of England governor just earlier today. We had a rate decision here. He was talking about, it's good that anything that reduces uncertainty is good. Anything that brings freer trade is welcome. But hopefully, as Donald Trump says, it does lead to more deals. And that suggests that a US-China deal would be more significant even for the UK than a US-UK trade deal.
Lizzie, I want to pull up a chart here that we made a little earlier that shows you the U.S. trade relationship, total trade between the EU and the U.S. and the U.K. and the U.S. And you can see what a minnow that the U.K. looks like relative to the EU, which is planning more retaliatory tariffs here. You mentioned the potential to set the stage for more deal making, but with this much of a differential, with the EU really having the advantage here in terms of how much that they're exporting relative to the United States, how much of a bigger deal, frankly, is the EU story with the US?
Wouldn't dispute that at all. The EU is a bigger fish to fry for Trump than the UK, but the UK needs to balance that EU relationship and the US deal for sure. When it comes to the trade relationship, that has been the case ever since Brexit. But politically for the UK, this is a huge deal to be at the front of the queue. I think that is why Keir Starmer has taken this softly approach, because the UK cannot take such a retaliatory stance as the EU has been taking against Trump.
All right, Lizzie, thanks so much for joining us. Bloomberg's Lizzie Burden there and Tyler Kendall at the White House. We're going to be catching up with you after this event as well. And for our viewers, we'll bring it to you from the White House as soon as the president starts to speak. Let's get back to the markets here. We won't get away from trade, obviously, because the markets and trade are so closely connected. But Stephanie Guild joins us here in the studio, Robinhood Financial Head of Investment Strategy. These headlines have been driving the equity markets, it's safe to say, on almost a daily basis here. What do you expect from this full and comprehensive U.S.-UK trade deal?
Probably just an outline of a deal, I think, is sort of the expectation, in line with a lot of other people's expectations. But as was just said, it's maybe the easiest one for us to do, in the United States to do, because it's the least impactful and maybe just sets the tone of one's coming. So it's positive from a signal perspective, but I don't think it's that big a deal in the grand scheme of what's going to happen. China's going to be way more important. Japan's going to be way more important in EU.
It's interesting. We were talking a lot about that hope, that optimism that's under the surface, and you really do see it in the trade today. Despite revisions, withdrawing expectations for the rest of the year from some consumer companies, you actually have consumer discretionary leading the way in the S&P 500. Is this a signal of...
On a one-day basis?
On a one-day basis.
Okay.
One day doesn't make a trend, but I do think it's a sentiment barometer here. If you see trade deals being cut, is the read-through effect ultimately that investors are hoping that the U.S. consumer, the hit to them, is not going to be as bad. Is that the ultimate hope under the surface?
Yeah, I think there's always hope, but as we always say, it's not a strategy, and I think we have to be, unfortunately, like patient, which, as Warren Buffett has said, is, you know, sometimes a liability and sometimes an asset. And I think in this moment, it's an asset because we still have higher volatility than we've had in a long time. The market is still moving at least 1% day to day, given the day. And I think you have to kind of hold out for this. We're seeing from Crocs, right? Like they removed their guidance. We've seen a lot of consumer discretionary names do that because they just don't know what the future is going to be.
You know, it's interesting. They were up upon that report today, even with the withdrawal. If that happened 2 weeks ago, do you think the same thing would be true?
Yeah, no, definitely not. Stephanie, what do you think about diversification right now? It's been such a loser for the last 5, 10, 15 years, right? I mean, you should have just bought the S&P and left. But now, are you advising clients to look at Europe, to look at Asia, to look at emerging markets?
Yeah, I mean, we say that you need to invest for every outcome right now in this, you know, particular environment. And we launched Robinhood Strategies, which actually takes discretion of customer money. Had it for about 6 weeks now. We are investing in kind of thinking about it in 3 different buckets. The 3 buckets are, you know, tariffs don't last much longer. We kind of have a bunch of deals very soon, and things can continue to grow. We're kind of putting like a 20% probability on that right now, but we're willing to change our probabilities in any given moment. The other probability is...
And you may have to.
We might have to.
At any given moment.
But we have like investments for each of these things, right? The 50% probability, like the main one is sort of that we have some tariffs that stay for a while, but they don't stay super high for a long time. And we kind of muddle through, but it doesn't bring, you know, interest rates down. It doesn't necessarily bring inflation down a ton. And you have to invest in what we say is like consistent winners, low volatility names, and some non-cyclical growth names. But we are putting a 30% probability on tariffs stay high for a long time. I think the stickiest part is going to be China. And when I was at the Milken conference, I felt like that, right? Like it is an effective embargo. And
wait, you were both?
Yes.
At the Milken conference this week?
And we are back here to be with you today, Matt.
Wow.
We wanted to sit right next to you this morning.
I saw Shonali from afar and never got to talk to her there. But I think there's that's what we're doing. When we have that, that's the probability you could potentially go into at least a mild recession, and we have some safer assets for those kinds of investments.
So these are some scary thoughts, right? Like these are some really big risks. But we were talking about Milken, that people were talking about the potential again for a new all-time high on the S&P 500. What would need to happen to see that retracement?
I think you just get a bunch of deals. Like you have that one bucket of, you know, what we're putting some non-cyclical growth names in, because you get a bunch of deals quick. But the meaningful, like lower tariffs, right? Like maybe for us, actually, the tariffs come down and vice versa, right? So that it ends up being pretty mild.
You mean come down to no more tariffs, which seems really counter to the whole raison d'etre the last 40 years of this president. I mean, he loves tariffs. It's the most beautiful word in the English dictionary.
Because he wants to bring manufacturing back here. He wants to bring, there's an alternative.
But he also wants to replace the income tax, which, by the way, I'm very happy to not pay taxes, but he wants the revenue from tariffs. So that would mean getting down to zero makes very little sense.
I just don't know how we do that in the near term, because if you think about the last time we had tariffs that much and no income taxes, it was, you know, this is not a global world. Like, we didn't have the technology we had. It was, I think it was the 1800s that we had that. So I just don't know if that extreme can happen. But when you're Donald Trump and you're negotiating the way that he does, he always goes really, really
But, you know,
hyperbolic.
Something I was looking at, look at the numbers, right? In all of the uncertainty, just look at the data. And one thing with the EU, for example, as this negotiation continues, it's really services that the U.S. is exporting.
Yeah.
So the whole notion of transforming this economy into a manufacturing one to make money is something I'm struggling with.
I mean, me too. I think this is a way in which we can make better deals, because I don't see a world in which we're not going to import our goods and export our services. But if we can make better deals for what we pay for things, I think drugs is an area that we do need to make improvements on. Like I heard you say earlier that we subsidize the rest of the world. That should change for us. That is a crazy amount of inflation for us. But if, and I think oil, we actually have a benefit in terms of having so much natural gas. Can we have set up some deals that way? I think there is there's a world in which we end up in a better place, but I just don't think, to your point, that we're going to end up in the next few years having factories here. But if it's something that sets up where in 5 or 6 or 7 years we've got a different economy, then maybe it ends up being a better place, but not near term.
Stephanie, great having you on the program. Hope you come back soon. Stephanie Guild there of Robinhood. I'll check out your strategies. What was it called?
Robinhood Strategies.
Robinhood Strategies. That makes a lot of sense. Coming up, President Trump's tariffs are dealing a blow to Toyota's operating income. We'll bring you the details of that story next. This is Bloomberg Open Interest. Let's get now to high interest. A look at what's making headlines around the world. U.S. labor productivity fell for the first time in nearly 3 years as economic output fell. The data snaps a streak of efficiency gains. The decline in productivity led to a 5.7% jump in unit labor costs. That's the most in a year. The Fed pays close attention to the data because productivity gains help curb wage inflation. Labor costs are the biggest expense for most businesses. And the Kohl's board has formed a search committee to find a new top chief executive after its CEO, Ashley Buchanan, was ousted last week. Kohl's said Buchanan directed millions of dollars of business to someone with whom he has had a personal relationship in violation of the firm's ethics policies. Buchanan had only been CEO for a few months before he was let go. And a diamond is forever unless it's synthetic. De Beers announcing today it will close its lab-grown diamond jewelry brand Lightbox. The company's technology unit, called Element 6, will still focus on synthetic diamonds. De Beers has been shifting its focus away from lab-grown diamonds and back towards the natural stuff that they pull out of the earth in a somewhat ethically questionable way. Shonali?
We are going to switch now to the pharmaceutical industry. Matt and I have been talking about it all morning. President Trump is reviving a plan to slash drug costs. According to Politico, he's planning on tying the amount the government pays for some medicines to lower prices abroad. Joining us now, the CEO of the leading platform for medication savings in the United States, Wendy Barnes of GoodRx. Very curious, Wendy, to hear what you think about the administration's plans. Can it be successful, particularly in the face of so much pushback from the pharmaceutical industry?
Yeah, hi, good morning. Thanks for having me. Look, I would start by saying, the regulatory environment is just wildly uncertain right now, particularly coming out of this administration. But what I would also say is any effort to improve affordability for Americans, whether Medicare, Medicaid, or general commercial or uninsured, we applaud. Truly, that aligns well with our vision and mission. Candidly, I think it's too early to weigh in on whether or not this will be successful. But again, if it's pointing to more affordable drugs, we're in favor.
But do you think there's actually a possibility? We were talking earlier about the fact that the U.S. essentially subsidizes drugs for the rest of the world, and the differential is large, Wendy. Is there a way in which that changes in the next 5, 10, 20 years significantly?
Yeah, I think it's going to be challenging, Matt, to truly impact that, delta, as you point out. I would also add that onshoring manufacturing, as I'm sure you've heard from a number of pharmaceutical manufacturer CEOs, this is not a fast turn opportunity, right? These are things that are going to take years to truly pull off, despite, I think, removal of administrative hurdles to do so. We also know that in onshoring drugs, study after study are proving out, to include our own research, that it's going to result in higher prices as well. These aren't going to be inexpensive to onshore. And so what that means generally for us as consumers, and in particular GoodRx, is that employers, payers, we know they have a finite pool with which to support their benefit, particularly prescription benefits. What that points to is, again, those higher prices are going to create an ongoing opportunity for more cash prescriptions, and we view ourselves as a complement to insurance. The overall vision mission will continue to be that complement to insurance. I view us as sitting alongside insurance. It shouldn't be an or, it should really be an and whenever there's a cash price that can beat out your insured price to include when you're in your high deductible phase, that's what the experience should be at the point of sale, the counter, whether it's home delivery, however any of us as consumers obtain our prescriptions.
Wendy, I want to talk about your results actually as well, because the street reacting very positively. Your stock is up 13% or more this morning. You have Leerink saying that GoodRx has been an underappreciated margin expansion story, and you have been very much holding up your estimates for the year. What do you think you're doing differently than other CEOs are doing right now?
Sure. Well, it's a good question. Look, it's a tough environment for sure, just giving regulatory swirl. But, so I've been in seat since January 1st. And what we talked about early on, both myself and the broader team, was that we need to focus on a few strategic imperatives. And it starts with ensuring that pricing is fair and affordable at the counter. That also includes ensuring that our partners who actually fill those prescriptions, retail pharmacies, can be profitable in doing so. We've done that in a couple of ways. As we continue to expand our partnerships with manufacturers around those affordability programs, and specifically around brand drugs, where we're obtaining a point of sale cash buy down, we're sharing those economics with our retail pharmacy partners so that they too can be profitable on filling those prescriptions. While I think those of us who sit in this industry day in and day out have long understood pharmacies are typically underwater on filling brand prescriptions, it's not something that's well known otherwise. So we are conveying the ability, sitting at the middle of this system with the manufacturer, with the retail pharmacy, and the payer, and ultimately the consumer, consumer, we have an ability to convey that value. And so as such, it's working for all parties. I think that's one reason that we're seeing the results that we are.
Well,
additionally, those same brand partnerships are allowing us to have conversations with payers, specifically PBMs, to also wrap those non-covered brand drug price points around our integrated programs with payers, which means that those of us who have insurance, and many do, should have the ability whenever the funded price doesn't make sense or whenever the price point is not covered at all, so the drug isn't covered, to be able to have that wrapped in benefit at the point of sale. So that is probably thing two. The last item I would point to is that our connectivity to healthcare professionals, those are prescribers and the support staff in offices. Pharma is now seeing that our connectivity to over 1 million of those prescribers every year who engage in our platform, it's a willing and able audience. We're a trusted brand in partnership with those HCPs. So pharma is now saying, oh, we should partner through you to be able to reach those same prescribers. I think you put those three things together, and that's what is largely pointing to the execution thus far, a quarter in.
Wendy, great to have you on the program. Hope we can get you back again soon. GoodRx CEO Wendy Barnes. This is Bloomberg. Let's get a quick check on the markets as we see optimism for a deal between the U.S. and the U.K. The S&P 500 up 0.5% right now. The Nasdaq gaining 2/3% on optimism for chip exports. This is Bloomberg.
you have weakening of consumer and business sentiment, you get a short and shallow recession by Q4. It's going to be short and shallow because then the Fed is going to cut rates since inflation expectations are the anchor. But we'll have a short and shallow recession by year end. That's probably highly likely.
That was Nouriel Roubini offering his outlook for the U.S. economy, talking about inflation expectations that are de-anchored. We are looking at headlines now crossing the terminal that Trump officials are considering fast-track deals with Gulf wealth funds as well. Of course, we're all here for the U.S.-UK deal that is expected to be announced imminently on Pennsylvania Avenue. And you've got media sources like The Telegraph in the U.K. saying that part of that deal is going to bring tariffs on UK-made cars down to 10%. So if you have an order in for a Range Rover or a Rolls-Royce or a McLaren, the good news is it'll only cost you 10% more than the sticker. Joining us now is Bloomberg's head of economics and government, Stephanie Flanders, out of London. Stephanie, first of all, great to have you on the program. Thanks so much for joining us. What do you make of this deal? The president says it's going to be full and comprehensive, but we've heard those kind of deals take years to negotiate.
Yeah, this is the tension. I think we're going to have this again and again about the deals that the president announces, because, you know, if you're involved in trade negotiations, if you've covered trade negotiations, you know that they take a hell of a long time, and they involve Congress usually, and they take years to ratify. We've never been talking about that kind of thing. We've never been talking about a comprehensive trade agreement with this deal over the last few weeks that was being negotiated. But we will be looking for how much certainty it gives UK manufacturers, UK importers and exporters, because as you know, the big hit, you know, arguably outside China, the biggest hit for US trading partners from Donald Trump's shift of approach, from his trade wars and the tariffs, is not just the level of tariffs, but as the uncertainty around them. So if, you know, even if, you know, we don't get a kind of the removal of all the new tariffs, the expectation is there's going to be that 10% baseline is not going anywhere. If there is some certainty that the other sectoral tariffs that might be coming down the track, pharmaceuticals and other areas, electronics, if there's some protection for UK producers in that sector, then that will be a useful thing for the UK government to have got. Nothing earth-shattering, but it would certainly be useful.
Speaking of certainty, I was looking at my little monitor here, Shonali, and I thought that was St. Paul's behind Stephanie. It's actually the Capitol building. So you're not in London.
I'm sorry.
She's in Washington.
Very much in Washington. And, you know, for Washington, the interesting thing about this is the total trade between the U.S. and UK really is dwarfed by many hundreds of billions when you think about the U.S.-EU relationship. However, Stephanie, how much does this trade agreement set the tone for the types of agreements we might see in the future, given that these won't be complete, as you say it takes years?
Well, I think it'll be interesting whether this really is a model for future agreements. Remember, it was supposed to be easier than many because the UK has a surplus or the US has a surplus with the UK, or US actually sells more to the UK than the other way around, at least in terms of goods. And there was not, as you suggest, there's not the kind of scale. There's just the amounts involved are much smaller. But you know, I think we will be looking for some sort of signs for the future, not least whether or not Donald Trump is willing to move on that 10% baseline. The expectation is not, but also whether he's willing to kind of offer any promises on these future sectors in advance of those announcements. So things on electronics, on cars, any of those things. Is he willing to move on those, or is he just looking at the reciprocal? Is he just looking at sort of mood music, like whether they're going to be nice to EU tech firms? You know, the UK has a tax specifically on the big digital service providers, which affects big US tech companies. You know, if that goes away with this deal, then that might tell us something about what he's pushing for with Europe. So there could be some signs, but there also is a rather different ground to cover in the EU deal.
Stephanie, we were talking with Stephanie Guild from Robinhood a little bit earlier, and she was saying, and I think a lot of people in the market are hopeful for a world in which we get to zero tariffs on both sides, right? That this is maybe a negotiating ploy to get us to at least lower tariffs than we currently live with. But we do hear the president often say he expects to bring in real revenue with tariffs, and maybe not just for 1 or 2 quarters. He wants to replace at least some income taxes with tariff revenue. So which is it? Does this White House want to raise revenue with tariffs to keep tariffs on foreign economies? Or does this White House want to negotiate with that idea and get tariffs down to where we have freer trade globally?
You know, and you've got to add a third one. They've also Scott Bessent has also talked about a third way of using tariffs, which is just to get other stuff that you might want. You know, remember, it's been used as leverage with the Colombians, with the Mexicans and the Canadians when it comes to things like fentanyl. So there are many, many things that this one tool is supposed to accomplish. It usually gets you into trouble if you're a government. From what you know, there is a consistency, although he changes day to day. If the sort of drumbeat from the president ever since he was elected was that there is going to be an entry fee for trading with the US, and it doesn't feel like that's going to go away. We may, I may be proved wrong in a few moments, but I think the idea that there's just going to be, just as you have to pay a price for admission to golf clubs and resorts and things that Donald Trump tends to, he thinks in those terms, Mar-a-Lago, though the price has gone up a lot. That's the kind of the way he thinks about the trading system. The US is a great place to do business, and you should have to pay to play. So I don't think that's going anywhere. But it is obviously very important for manufacturers whether you get into a kind of 10% zone or whether you're still in, for other countries, whether you're still talking about 30, 40, 50%. When it comes to China, we were talking about it this morning, you could potentially get back to the original Liberation Day tariffs for China in a deal, and that would be, slashing the current tariff rate. But if you're a manufacturer of the goods that are going to the US, the difference between 140% tariffs and 50 is actually not as great as you think. It's still going to blow you out of the water.
Stephanie, you had mentioned the Treasury Secretary, Scott Bessent, and of course there's that Switzerland meeting that will include the Chinese Vice Premier. Isn't this the elephant in the room, ultimately? What are you looking for in terms of those negotiations, given that that's the bigger trading partner we're talking about here?
Yeah, and I think it's very interesting that we have the US Trade Representative Greer and Scott Bessent involved in those deals. We weren't in that negotiation in Switzerland. We weren't sure that was going to be the case. They have slightly different perspectives. We think of Jameson Greer as being a bit more of the sort of harder line school on tariffs. Scott Bessent has sounded a bit more conciliatory, that he would expect to see tariffs to come down significantly. So even just having them both in the room is an interesting thing to contemplate. But I don't think there's an expectation that we're going to have, anything like a framework agreement come out of these meetings. But we've at least got past the stage of who's going to pick up the phone. We seem to have got, we are now getting them both all in a room.
Stephanie, great to get some time with you. Really appreciate it. Stephanie Flanders is the head of Bloomberg Economics and Government. She is in Washington, D.C., standing from a backdrop of the Capitol that is not St. Paul's. I will say, when I worked in London, my backdrop was St. Paul's, and everybody thought I was in Washington all the time.
Well,
the domes are eerily similar if they're in a small picture.
Well, the new power center is what we're taking a look at now. And it's interesting because the leverage in this negotiation, remember, is not the same as you see in the other negotiations that are being had throughout the weekend.
Yeah, and I also think there's an argument to be made that this is a different kind of relationship, right? That special relationship. We know that President Trump really appreciates the royalty of the United Kingdom. He's going to meet with King Charles. He went and met with Queen Elizabeth. So we'll see how much of a blueprint this proves.
Is he going to react to the EU? In some ways, the UK news is being dwarfed by the EU's retaliation. These are much bigger dollars that we're talking about, Matt.
Yeah, and it's a problem for American manufacturers as much as we want to believe it isn't. For Harley-Davidson, it really hurts to have these kind of tariffs. We'll continue to talk about this, and we're going to get you to the White House as well. I want to get a quick check on markets before we do that. Right now, we continue to see gains in terms of the equity indexes. Right now, up 0.5% on the S&P 500. Remember, we closed up almost 0.5% on the S&P 500 yesterday after the Fed we have the NASDAQ gaining about 0.6%, which is maybe a little less than you might expect, right? Because we have the president also talking about pulling back on chip export curbs that were put in place at the end of the Biden administration. And you would think that would drive NVIDIA shares higher. But right now, we see NVIDIA actually a little bit lower, about 0.3%.
Fascinating. And we're certainly off of session highs for both indices. And actually, the 10-year now up on the day. We had a little bit of relief in the bond market. Not today. Anyways. Coming up, President Trump's tariffs are dealing a blow to Toyota's operating income. We're going to bring you the details on the car maker next. This is Bloomberg Open Interest. Now, we want to circle back to news that broke just a few moments ago that Trump officials have discussed the possibility of granting the UAE, Saudi Arabia, and Qatar a special fast-track status for deals. The move could smooth the way for billions in investments. We've already seen some of them come through. Here with us now from the White House, Bloomberg's Tyler Kendall. And it's interesting, you think about, for example, Saudi Arabia already being a part of the AI announcements, and now he is opening a much bigger door to the Middle East, where we know the Trump family has had a lot of contact over the years. What does this mean in terms of the types of investments this could bring into the United States?
Right, exactly, Sonali. Potentially trillions of dollars of investments, considering that these sovereign wealth funds in the Gulf states really do oversee such large amounts of money. And I was there at the FII summit back in February, of course, backed by the Saudi Arabia wealth fund, where President Trump really made his case that he wants to see more foreign direct investment from these countries flowing in to the United States. Now, officials do caution us that at this point, nothing has been decided. These are preliminary deliberations, but they are looking at potentially changing CFIUS, the Committee on Foreign Investment in the United States, that reviews these large-scale potential investment sums when it comes to national security concerns, really potentially opening up the door here to more deals with these Gulf states. Important to note, of course, these are the three countries, the UAE, Saudi Arabia, and Qatar, that President Trump is going to be visiting later this month when he starts his tour of the Middle East.
First of all, I feel like there's somebody with a leaf blower walking around behind you, which is a pretty unfortunate thing for them to be doing. They got to keep the White House clean. In terms of the chip exclusions or export curbs, what do we know, Tyler? Because NVIDIA shares aren't reacting positively today, but it seems like it should be really good news for the tech sector.
It seem like it would be good news for the tech sector, considering that they have been lobbying this White House to back off that AI diffusion rule. But officials do tell us that that doesn't mean that no rule is going to be implemented. Rather, it's just going to be less complex, according to a senior official in the Commerce Department. And when you really look at this broadly, this White House has taken more of a stick versus carrot approach when it comes to these chip makers. In fact, you have some big tech execs on Capitol Hill today, including OpenAI, CoreWeave, Microsoft, AMD, all testifying in front of Capitol Hill about exactly what they need to get ahead when it comes to the AI race and chip production. And a lot of that does have to do with things like tax credits and subsidies that up to this point, this White House has really been more hesitant to put forward and give to them. What the actual rule does look like going forward does remain to be seen, but it does appear that we are moving back from that idea of a three-tiered country system that would lump some of these countries, including many U.S. allies, into more stringent restrictions when it comes to export controls on chips.
Tyler, we appreciate all of your reporting. That is Tyler Kendall from the White House. And you know, Matt, it's interesting. There is a massive tie-in here between the story about the Middle East and what you're seeing with the chip curbs, because the UAE is racing to become a tech powerhouse. They are looking to get greater access to NVIDIA chips that had been restricted during the Biden administration. And when I talk to my sources across Wall Street, they're also looking to the Middle East to be a bigger data center hub, an energy hub as well for those data centers. So strategically, this is a really interesting alliance.
Yeah, and that's a huge part of it. All right, really interesting context there. I want to switch gears, though, now to automotive, because the Telegraph has reported that the U.S. will cut tariffs on UK-made cars to 10%. Joining us now for more is Bloomberg's Global Autos editor, Craig Trudell. Craig, very interesting reporting in the Telegraph, and this would affect, well, Sonali's concerned about the Range Rovers first and foremost, but some of the most expensive cars in the world, right? Gordon Murray Automotive, Aston Martin, McLaren, McMurtry, and Rolls-Royce. How significant is this?
It's big for some of those, high value vehicles, but I would, sort of to put this into context, you have the UK ranking 6th on the list of countries with the most, most value of vehicles imported into the US last year. And it was much smaller in terms of value than some of the leaders, which, Germany, South Korea, also, even Japan also on that list. So while this is important for some of these players and even some of the more affordable models like Mini comes to mind, it is a big deal for the UK, but in terms of the US market impact, it's much smaller than some of these other countries that are being hit. I should throw Canada and Mexico in that mix as well.
Craig, I do want to focus on the Range Rover here for a moment here, because we're talking about very, very popular cars in the United States. And, you even had the Telegraph leading with the name. And if it is easier to access them, how big of a deal is that type of relief?
It's really important because JLR has had real issues. They are even taking out the Jaguar brand for a significant period, and as Matt knows and will appreciate, we're sort of given quite a bit of grief for this grand redesign that they're attempting with this brand. They're trying to go all electric and really different and out there with their positioning. That sort of leaves the company with the Land Rover side of the business that it's entirely relying on in the meantime. And JLR is right up there with Nissan as depending on the year, either the biggest or second biggest manufacturer in the UK. So for them to be hit by these much higher tariffs, with the U.S. market being so important to that company, this was a major issue and a real concern here in the UK over just how long these tariffs were going to last. And you saw Land Rover for a time there even go so far as to suspend shipments because they wanted to try and wait this out.
All right, Craig, great to have you on the ground with us. Craig Straddle there in London, in the UK, where we're getting these headlines from. Again, the Telegraph saying that the Trump administration has a deal with the US and the UK that will reduce tariffs on UK-made cars imported into the US to 10%. I would be remiss not to mention Caterham is another one that people are writing in to me about. Lotus is one that people are writing in to me about. Morgan, famously making wooden-framed cars, including a three-wheeler. So not huge markets, but this will be some relief to those who want to buy those niche products.
And while we're waiting for the actual word from the president himself, I want to bring you some headlines going on at the event. We'll bring you the news as we get it, the feed as we get it. He speaks in the Oval Office. He is saying that it's a tremendous deal for both countries. He's saying this is a very special day. He says he's reached a great deal with the UK. Still light on details out of the White House, but we will be following it and bringing it to you as we get them.
Yeah, talking a ton about deals really today, saying that he's reached a rare earth deal with the UK. That's a tremendous deal for both countries. With Ukraine, and saying that that's a tremendous deal for both countries. So far today, in terms of deals, we can round it up, right? We've got the US-UK deal that he says is full and comprehensive. We've got the Mideast Wealth Funds deal and Ukraine. Let's get to the White House right now and listen to President Trump.
The past 4 weeks, with this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle of international trade. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. And our Secretary, as you know, of Agriculture is here. Brooke, thank you very much for being here.
Thank you, sir.
You'll let the farmers know. In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products. But this is now turning out, I think, really to be a great deal for both countries because it'll be really great for the UK also. So they're opening up the country. Their country is a little closed, and we appreciate that. They'll also be fast-tracking American goods through their customs process, so our exports go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways. The final details are being written up in the coming weeks. We'll have it all very conclusive, but the actual deal is a very conclusive one. We think just about everything's been approved. So good for both countries, and we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed, and they'll end up getting products that they'll be able to price, and if they like them better and we make great products, they'll be buying those products, but they were not available in the UK. Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that because it's been a great ally, truly one of our great allies. I mean, a lot of people say our greatest ally. I don't want to insult people by saying that, but I can say it's certainly one of our greatest, and right at the top. And they're the first one we're talking about. And by the way, we have many meetings planned today and tomorrow, and every country wants to be making deals. And we have a meeting, as you know, Scott will be going over to Switzerland on Saturday, and that'll be very, very interesting. Let's find out, but I think they want to make a deal very badly, too. Both countries have agreed that the economic security is national security and will be working together as allies to ensure that we have a strong industrial base, appropriate export controls, and protections for key technologies and industries like steel. Steel is a big factor. Both countries will become stronger with steel and things necessary for military. You know, we used to build ships and other things literally at a level that nobody's ever seen, and we haven't. We've eased up, and I would say that the UK certainly eased up, but now we're going to be uneasing both, and we work together. Once again, I want to thank Prime Minister Starmer. He's been terrific for his partnership in this matter, the special relationship and external bond. It's really an external and an internal bond between our two countries will soon be stronger than ever before. And we really do. We have a great relationship. I want to just say that the representatives of UK have been so professional. And it's been an honor doing business with all of them, and in particular the Prime Minister. And I'd like to introduce him now to say a few words. Mr. Prime Minister, please take it away.
Thank you, Mr. President, Donald. And this is a really fantastic, historic day in which we can announce this deal between our two great countries. And I think it's a real tribute to the history that we have of working so closely together. Can I pay tribute, Donald, to your negotiating team as well, particularly yes. Howard and Jameson, who've done an incredible job, a very professional job, and my team as well. Two negotiating teams have worked at pace now for a number of weeks to bring in this deal today. Really important deal. This is going to boost trade between and across our countries. It's going to not only protect jobs but create jobs, opening market access. And as you say, Donald, the timing couldn't be more apt because not only was it 80 years ago today that victory came for Europe after and at the end of the Second World War, but of course on that day the UK and the US stood together as the closest of allies. And Donald, I think even down to the hour, because you may or may not know that it was about this time of day, exactly 80 years ago, that Winston Churchill announced victory in Europe, and that led to great celebrations across Europe, across America, but particularly in the United Kingdom. Literally people going out into the street, putting bunting up, going up to the palace. And so to be able to announce this great deal on the same day, 80 years forward, almost at the same hour, and as we were 80 years ago, with the UK and the US standing side by side, I think is incredibly important and makes this truly historic. That close relationship has endured over those 80 years. As you know, Donald, when it comes to defence and security and intelligence sharing, of course, there are no two countries that are closer than our two countries. And now we take this into new and important territory by adding trade and the economy to the closeness of our relationship. It is built, as you say, on those notions of fairness and reciprocal arrangements. We've always had a fair and balanced arrangement between our countries. This builds on that, hugely important for sectors like car manufacturing and for steel and aluminium and so many others. And yes, we can finish ironing out some of the details, but there's a fantastic platform here, including, of course, on the tech side, where I think think I'm right in saying we're the only two Western countries with trillion-dollar sectors when it comes to tech. And in the end, it comes down to, as you say, Donald, economic security is national security. On national security, we've been absolutely the closest of allies for so many years, keeping the peace through that close alliance, that friendship. And now we add to that this deal on trade and the economy. And I want to thank you for your leadership on that, Donald, and for the way in which your team have negotiated this. And I'm so pleased that we've got this deal, we've finalised it, and we've built an incredible platform for the future. So thank you so much. Donald, I'm now going to go and do a press conference. I think you have your press in with you. But on the details, I think if you've got Howard, we can deal with that through one of my team.
That's great. Well, Mr. Prime Minister, thank you very much. It's an honor. We're going to have a continued, maybe a better relationship than ever before. You know, I don't know if the media knows, but the U.S. and U.K. have been working for years to try and make a deal. And it never quite got there.
Yeah.
It did with this Prime Minister. So I want to just congratulate you.
Well, with this President, this Prime Minister, we've managed to achieve what many people have tried to achieve for many years.
Right.
And I'm really pleased, and it feels completely historic and on a special 80-year anniversary as well. So, Donald, thank you so much. It's really good to have got this deal over the line. Tribute to both teams, tribute to our countries, and tribute to your leadership.
Thank you. Well, it really is a great thing. And you go do your press conference, and I'll see you soon. Maybe speak to you later. But thank you very much. An incredible thing. I can't tell you that for so many years, even as I sat, everybody talked and talked and talked about a deal with, it just seemed like a natural deal, but it was not done. But now it was done with us. So I feel very proud to have been a part of it. Keir, thank you very much.
Thanks, Donald. We'll speak again soon.
Very good. So long. Bye. Why don't I do this? Why don't I have our Secretary of Commerce, Howard Lutnick, give a little description of the deal pretty quick, and then the good side, the very nice side, we'll be speaking about it also, maybe, from so you get a pretty equal. I think it's a very, it's just been a deal that was, we thought, very complicated. It became very simple. It's opening up the country that we really didn't have the kind of access to that I would have thought. I was surprised. I think it's why the deal never got done before. It was, you know, they've been working on this deal for 25 years. And we got it done, and we got it done. Really, it's going to be great for both countries. So, Howard, if you could go, and then somebody else, you may have, you'll pick whoever you want who'd like to do it. I have a feeling you're going to do it, right? So you guys go ahead, and then we'll take questions right after that. But I think you'll get a pretty good understanding of how big it is. It's a very large deal, very big deal. And Howard, go ahead.
So the UK is the 6th largest economy in the world and the 4th largest that we export to, right? So it's a huge market, a top 10 market. If you remember Liberation Day, they were at 10% because we have balanced trade with the UK, right? They say they have a surplus, but of course that counts gold bullion, which is, so let's just call it balanced trade. So how do you open up a market in balanced trade? People think it's impossible. They've always thought it was impossible until President Trump came on the scene and changed the way things work. So here's what we've got. We've opened up new market access. Ethanol, beef, machinery, all the agricultural products. They've agreed to open their markets, and that will add $5 billion of opportunity to American exporters. So the question is, why would they do that now? Because they've never done it before. And we still have our 10% tariff on, which will produce $6 billion of revenue for the United States. So the idea was, how do they keep their jobs, protect their economy, and do the best for their people while opening the market for us? And the way is they studied it, their team was exceptional, and they tried to figure out the markets that they're importing from other people and try to send them over to America. So why were they always favoring others and not us? And what they've done is they've found the ways to do that so that we have new access, right? But the UK workers are protected, and that was the balance. So we did a deal with them in automobiles, and you know, if you're not building here, we charge you a 25% tariff. But the president, and by the way, I want to make this clear, while Jameson and I worked hard, this was the president's deal. And people think, oh, that's not the way it works. If you got to sit next to him, I have the best deal maker to my left. And if you don't think that we take advantage of him calling the prime minister and getting that deal done, you don't understand who's the president of the United States. So he's the closer. He gets deals done that we could never get done because he understands business, he understands deals, and that's why we're here today. So he agreed they could send 100,000 cars into America and only pay a 10% tariff. And that protects their car industry. And remember, we do 16 million cars a year. So this is only like 0.6%. But for the UK auto people, this is tens of thousands of jobs that the president agreed that he would protect for them. So he made that deal, right? Then steel and aluminum, right? Their steel business has been destroyed like everybody else has been destroyed by people dumping steel into their markets. And British Steel had announced it was closing down. So the British government, as part of this deal, nationalized British Steel, and they're going to match the kinds of models we do. They'll put tariffs on, they'll put quotas on. They want to do it with America so they can be part of the resurgence of steel and aluminum in America, and that saves them, again, thousands and thousands of jobs. So if you go step by step, aero and commercial planes, they sell Rolls-Royce engines to Boeing. We've agreed to let Rolls-Royce engines and those kind of plane parts to come over tariff-free. And what you're going to hear today is there's going to be an announcement in the UK that they are buying $10 billion worth of Boeing planes later today, but I'm going to let the name of the airline announce it because that's theirs to do. But part of this deal was always to do it together and to do it strong, and you can see the numbers. On this board. Everything about this board works exceptionally well for the United States of America. It lays out the plan that you can work with us in autos, you can work with us with aero and commercial, you can work with us in pharmaceuticals if you have a supply chain that is secure and protected in national security. So we feel really good about the deal. You've heard the Prime Minister. He feels really good about the deal, right? And we started at 10% and we ended at 10%. And the market for America is better. And this is a perfect example of why Donald Trump produced Liberation Day. People don't understand he gets things done in a matter of time. This would have taken Jameson and I 3 years, maybe. And instead, we got it done in 45 days, certainly, because we work for Donald Trump. So, Jameson, my partner in all this, maybe Jameson, you'd like to talk a little, and then we'll turn it over to the UK.
Sure, happy to do that. Everyone has great remarks. I just have to echo the President and Prime Minister when we talk about VE Day. This is something we've been waiting for decades, and there's no more appropriate day to do this. And when we step back and we look back a few weeks from now or months from now or years from now, we'll look back at this day and better appreciate the significance, I think. And I'll just say as well, in terms of negotiating, I mean, the UK negotiators, you know, we've got one right here, did an incredible job, right? This is why you win wars, right? When you act like this, and the ambassador, he knows more about trade than a lot of us here, based on his background. And I would say on this deal, Mr. President, what we've shown is that it is time to change the way we do trade. People said we couldn't do a global tariff. We did a global tariff. They said no one would want to deal with us. People want a deal. They said no one give offers. You saw that stack of offers I showed you yesterday of all those countries. Said we wouldn't get deals, and here we are with a deal with the 6th largest economy. We've agreed to have fair and reciprocal trade, and we've done it in record time.
Thank you very much, sir. Great job.
Thank you, sir.
Mr. Ambassador, please. Well, Mr. President, thank you very much indeed in hosting us this morning. And thank you very much indeed also for that very typical 11th hour intervention by you with your phone call to the President, demanding even more out of this deal than any of us expected. So thank you for that. The Prime Minister was delighted, obviously, to take that call late at night. But you took it to another level, and I think the point I would make is twofold. One is that if we're going to rebalance and rebuild international trade in a way that serves all our interests, then we're better doing that together than separately and apart, and that's what we're on a mission to do. But secondly, you've done what you said you would do. You said to the Prime Minister when he came and we visited in the Oval that you would do a good trade deal with the United Kingdom, that you would do it at pace, and that we would be first. And you have delivered that. You've been true to your word. So thank you very much indeed for that. For us, it's not the end. It's it's the end just of the beginning. I mean, there is yet more we can do in reducing tariffs and trade barriers so as to open up our markets to each other even more than we're agreeing to do today. But it also provides us with the platform, the springboard, to do what I think will be even more valuable for both our countries in the future, and that's creating a technology partnership between the United States and the United Kingdom so that we can harness science and technology in order to create future industries and future jobs, and to do that together in the way we work so closely already in the national security and defence area. We can just take that to yet further areas of science, enterprise and endeavour. So we're looking forward to doing that in the coming months. You've launched us extremely well today. It just, in my view, as the Prime Minister has said, just shows what two countries who trust each other, who are confident in each other and are familiar with each other can do, not just for ourselves, but for the rest of the world who need to benefit from a bigger and better international trading system.
Thank you very much. That was beautifully stated. What a beautiful accent. I'd like to have that accent. Thank you. My mother would be proud. Thank you very much. Any questions?
James Matthews from Sky News.
Yes.
Can I ask, why Britain and why now? And you've described this deal as a full and comprehensive deal, and yet we've just heard from Mr. Manuel said it's the end of the beginning. Clearly, there's much more work still to do. Yeah. With respect, are you overstating the reach and significance of this deal because you're a president who needs a result at a difficult time?
I think that it's a great deal for both parties. It's for us. We're opened up. I didn't know how closed it was. Quite closed, the market, as you know, the UK, and it opens up a tremendous market for us, and it works out very well, and a lot of assets. You see the chart, and those are tremendous assets. But we've been trying, and when you say why us, meaning your country, we've been trying for years, and they've been trying for years to make a deal, including when I was in the, first term. It would always be people talking, but they weren't getting it done. But for 25 years before that, they were trying always to make a deal, a very significant deal. I actually, until I looked at the numbers, I didn't realize this is a very conclusive deal, but we think we can grow it even from that. But this is a maxed out deal, not like you said it. You said it really incorrectly. This is a maxed out deal that we're going to make bigger, and we make it bigger through growth. But we have tremendous assets involved. I was surprised to see how big your country is in trade, actually. One of the biggest in technology and so many other things. It's agriculture. I really didn't know. It's depending on your definition, it's from 4 to 5 to 6. That's pretty big in the world. So I was very impressed by that. But we're going to take it to new levels. It's a very big deal right now. but I think it is going to grow just of its own volition. It's going to grow, and over time there'll be changes made, there'll be adjustments made because we're flexible. We'll see things that we can do even better. But it's very conclusive, and we think everyone's going to be happy, and the people of your country are going to be very impressed with the result, and they'll be able to buy from more people. They'll be able to price things differently. They'll be able to get some products that aren't available to them now that we make better than anybody in the world. And it's just something that it's a great thing that it came together. It's so nice because we have many countries want to make a deal, and many countries are very unhappy that we happen to choose this one, to be honest with you. But it's a long time, our oldest ally, or just about, because a couple of people claim that too, but let's put it right at the top. I think it's going to be something very special for UK and special for the United States.
Mr. President. Thank you, Mr. President. Reagan Reese with the Daily Caller. How close are you to more deals, and when do you expect the next to be announced?
Well, very close. We have numerous deals. I know Howard's going back. As soon as this is finished, your press conference, he's got numerous. And Scott, who's right over here, who's fantastic, by the way. You were great on television this morning. I watched you. That was very good. He gave them a little lesson in the world and economics. But Scott's going to be going to Switzerland, meeting with China. And, they very much want to make a deal. We can all play games. Who made the first call? Who didn't make them? It doesn't matter. It only matters what happens in that room. But I will tell you that China very much wants to make a deal. We'll see how that works out. Every country throughout the last 40, 50 years has literally ripped off the United States on trade, on military, on protection, on all the different things. And we are now making fair deals. And in this case, it's great because we really weren't very much involved. You have the European Union, which is, I think you made the right decision years ago. I don't know if you remember, I was opening up Turnberry the day that you were voting. And they asked me, would it happen or would it not happen? I said, no, I think they're going to go their own separate way. I think it's better for them. And they did. I think it's going to end up being a very smart decision. But a big part of that decision was always that you'd be able to make a deal with the United States. And they were unable to do that. But now they made it. And it's a tremendous, it's very important. That was always a big part of your decision on Brexit. And they were never able to make that deal. It was a tough one. And this one it's amazing with time. This one just went very smoothly, went quickly and smoothly. And a lot of common sense, as I like to say. There's tremendous common sense, but it's going to make your country much bigger in terms of trade, and it's going to make our country much bigger in terms of trade, too. Yes, sir.
Thank you. For
the behind you.
Oh, yeah, Tom Bacon from the BBC. Thank you, Mr. President. You mentioned meat.
You're with who?
The BBC.
Oh, good. Very nice. Thank you.
You mentioned meat and beef exports. The UK currently doesn't accept American beef because of its own food standards. Are you calling on the UK to accept all American beef and chicken products?
Well, I think they'll take what they want. We have plenty of it. We have every type. We have every classification you can have. As you know, Bobby Kennedy is doing a tremendous job, and he's, I think, probably heading toward your system with no chemical, no this, no that. And I think we're heading that way. It seems to be. And but we have that also. So we're a very big country. We have a lot of beef. We're a very big country, so it'll be great. Yes. Yes.
You want me to jump in?
Yes.
Let's talk about American beef really quickly, and it can't be understated. I'm Rick Rollins, by the way, how important this deal is and what this means to American farmers and ranchers. Specific to the beef, this is going to exponentially increase our beef exports. And to be very clear, American beef is the safest, the best quality, and the crown jewel of American agriculture for the world. So I think a really important part of this deal isn't just the ethanol reducing of tariffs from 19 to 0, which for our row croppers is a huge deal, but also for beef. And as we move forward, I know our incredible trade team is looking at all of the meats, all of the produce, really all of our agriculture exports. And I don't know if there's an industry that has been treated more unfairly and has suffered more than our agriculture industry. So we look forward to, I'll be in the UK on Monday. Monday, talking to my counterpart over there for next week, and look forward to moving that out across the country. The president is
I think we could say that we have the best in the world, best tractors, the best everything in the world, and they say that our agriculture is, second to none. You understand, and it'll be a great asset. People are going to be able to have options, choice, and they'll have more of it. And that usually means lower prices. How about we'll do you and then you?
A follow-up question for the Italian TV, Daniele Compatangelo, LA7, TV 2000, Primetime Media. So congratulations for the deal. We'll see a big revenues from the chart. But what's the rest of Europe? It's a victory day, but other European countries, it seems like they're losing the trade.
We intend to make a deal with Europe. We have found that the European Union treated us extremely unfairly, very difficult, and hurt themselves in doing so. And they very much want to make a deal. We'll be dealing with them. We are dealing with them currently. So that'll cover pretty much the rest of it. But this was separate because of Brexit in particular. This was a separate deal. It always seems so natural. I mean, all the media would say that this seemed to be like, why did this happen 25 years? Why didn't it happen a long time ago? And it was always amazing to me. Somebody would say, hey, we got to make a deal. We have to make a deal. But this deal just fell into place. The Prime Minister did a fantastic job. His representatives are total professionals, and they got along well, and it just seemed to work. And I think one of the reasons it did is because we blew up the whole system. If we would have just been dealing with you separately or, country by country, we blew up the whole system. It was very unfair to the United States. And I think because of that, this worked out so nicely, and I'm honored that it was the first deal. Please.
Sir, you mentioned...
Well, why don't you go in the back, yes?
Oh, thanks, sir. I'm with the London Times. I'd say this is a great day for James Bond because now Aston Martins will be available to American buyers. Will it be even better by extending it to film? You've talked about a big tariff on films, and we'd like to know if there'll be relief on British...
Well, we're going to have a discussion on that separately. And as you know, we're putting tariffs on that particular film, he said, the movie makers. And we're going to be doing some tariffs to get them because a lot of them have left this country. They all live here. The money comes from here. Everything comes from here, but they make them in other countries. So we're going to do something to bring them back, maybe to a large extent. But James Bond has nothing to worry about that, I can tell you. James Bond. And, Sean Connery was a friend of mine. Sean Connery was responsible for my getting zoning in Aberdeen. He said, let the bloody bloke build his golf courses. I was like 4 years into the process, and it was impossible in Aberdeen. And he just stood up one day and he said that. As soon as he said that, I got the approvals in about 2 minutes. So he was a great guy, Sean Connery, and great character.
Later in the year? Are you going to Scotland and to the
Yeah, I will be, sure. It's great. And we have a lot of investment over there. We have Turnberry, Aberdeen. We have, as you know, in Doonbeg in Ireland, right on the ocean. They're all in the ocean. I only have interest if they're on the ocean. And we have good investments over there. It's been beautiful. Yes?
Mr. President, if the talks go well this weekend between Secretary Bessent and Ambassador Greer with their Chinese counterparts, not preemptively, but if the talks go well, would you then consider lowering the tariff rate on China?
Well, it could be. I mean, we're going to see. Right now, you can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship. I always got along very well with President Xi. That relationship was greatly disturbed by COVID when COVID came in, but we get along very well now. I mean, the relationship was hurt with a lot of people, a lot of countries when COVID came in. But I think we're going to have a very good relationship. I expect to have a very good relationship with China, Scott. I think it's a very friendly meeting. They look forward to doing it in an elegant way. China, as you know, has a tremendous trade surplus with us, and we just can't have that. And but I think it's going to be very good for both countries. I would like to see China opened. One of the big things here is, and nobody would know this, but the UK was largely closed. It was very much closed to trade, and now it's opened. And a lot of the financial reporters are very happy about that because so much. I listened to them. I hope they get countries opened up. And then you compete on a fair basis, but you can't compete when you're not allowed to go there. China would be the number one example of that. It's very close. We almost had it last time before COVID, and that didn't work out. But we made a great deal with China. They had about $50 billion worth of our food products, and it was a great deal, doing very well for our farmers. And then when Biden came in, as usual, nothing happened. You know, he didn't enforce it, and it got less, and ultimately, you know, it destroyed a great deal. That was a great deal. But no, I think that we're going to have a good weekend with China. I think they have a lot to gain. I do think they have far more to gain than we do, in a sense, but we're going to have I think we're going to have a very good weekend.
Will you speak to Xi after the weekend talks?
I might, yeah, sure, depending on what Scott says. We Scott is doing certain countries, and Howard's doing certain countries. I mean, I wish I had like 10 more of each. Then we could do them all at one time. But there will be a time. We'll do a number of them, and then there'll be a time. I think I can say to Scott and Howard, where we're just going to say, because we understand the countries, we understand what they want, where we're just going to make the deal. In other words, we don't need the country involvement because we've already had it. And we'll say this particular country, which had big surpluses, let's say, we had therefore deficits, that this particular country is going to pay a 25% tariff or a 30% or a 50% or 10% or whatever it may be. I think we should explain it now, Howard. One of the things we did here that we'll rarely do is on cars, we took it from 25 to 10 on Rolls-Royce, because Rolls-Royce is not going to be built here. I wouldn't even ask them to do that. You know, it's a very special car, and it's a very limited number too. It's not, you know, one of the monster car companies that makes millions of cars. They make a very small number of cars that are super luxury, and that includes Bentley and Jaguar. So we have some very special cars. So in order to help that industry, and that's really, you know, handmade stuff, and they've been doing it for a long time in the same location. And I said, yeah, that would be good. Let's help them out with that one. But that's different than a car company that comes out and makes millions of cars, which they'll be doing in our country. They're going to build, we have many factories, car plants being built or going to be built very soon. I think we can say that we'll be close to $10 trillion of investment. I think we're actually at that number now if you add up some of the ones we haven't heard about yet. I mean, we have some going up right now. They have plants going up, and they haven't even spoken to us. They're doing it because of the tariffs. And tariffs have always been used against us, and I never understood. I used to sit back. As you know, China paid hundreds of billions of dollars in tariff when I was president. But until then, China never paid anything. And, you know, they really did a big number on us from the standpoint of trade. But we are using tariffs now for our benefit. And we have now close to $10 trillion. Think of that, $10 trillion. If you look at the past administration, and we're talking about over, you know, essentially 2 months, because we could say 3, but it took a little while to get the office in perfect shape, right? It took a little while to get things done. But once we started, when you think of that, close to $10 trillion of investment, you've had years where the United States wouldn't do that wouldn't do $1 trillion in a year, wouldn't do anywhere near $1 trillion. We did $10 trillion in 2 months. So it's amazing what's happening. We're getting calls and that has to do with chips, has to do with cars. We used to make chips. We had Intel, and we used to make chips. We had a monopoly on chips. Everything was made here. And now, over a period of years, because of presidents that didn't know what they were doing, they allowed that business to be stolen from us. Most of it moved to Taiwan. And you probably were in the same position, right? Because you had a lot of the chip-making capacity, but they moved it in. And if we would have said, that's fine. If you want to move it to Taiwan, that's good. But if you want to sell back into the United States, we're going to put a 50% or 100% tariff on, they would have never left. But we had people sitting here that didn't understand that, and it's too bad. But now they're coming back, because I'm saying it about 40 years too late. But they're coming back. As you know, we have the biggest chip makers in the world spending, in one case, $300 billion, in one case, $500 billion, same as Apple, and in another case, $200 billion. And we're going to have a large share, very, very substantial share of the chip-making market.
You said that this weekend is going to be a friendly visit, but do you expect that it will just be a formality to break the ice, or are they going to get into substantive negotiations?
I believe so, yes. I believe it's substantive, yes. I think people like to say, yes, we're having a meeting to meet. Well, we're meeting, so what are we going to do? Talk about meeting again? So I think it's going to be substantive. I think we can say that, right, Scott? Very substantive. Now, China wants to do something. And look, they have to at this point. Essentially, they made $1 trillion a year, and now they have absolutely, no business because of the tariffs. They have no business. And they want to have business, and we want them to have business. We want them to do well. We want them to do very well. So I think it's going to be very substantive.
Because business has slowed down, as you mentioned, we're seeing as a result, the ports here in the U.S., the traffic has really slowed, and now thousands of dock workers and truck drivers are worried about their jobs.
That means we lose less money. When I see that means we lose less money. Look, China was making over $1 trillion, $1.1 trillion, in my opinion. Different numbers from 500 billion to $1 trillion or $1 trillion. I think it was 1.1 trillion. And frankly, if we didn't do business, we would have been better off. Okay, you understand that. So when you say it slowed down, that's a good thing, not a bad thing. But we're going to make it so they can. I'd like to say they can do better, actually, in terms of the bottom line. We'd like to see China opened up so we can compete in China and give people something that they've never had. Access to something that'd be great for the world. It would be great for our businesses, and I think it would be great for friendship. I really expect a lot of people think I'm a militant guy. I'm really not. I think that trade can bring a greater friendship with China. It can be something good. But one of the things that I know Scott's going to be talking about very high on the list is open up and let our businesses go into China, because when you talk about a closed country, that's a really closed country. And I think it would be great if it was opened up. It would give people a lot of choice and would create a lot of jobs, a lot of everything. So I think it would be a great thing for China. And that's going to be one of the things we'll be discussing, like we discussed with UK.
So what does Britain have to do for you to drop the baseline 10% tariff that you're maintaining?
Well, I think that's set because that has to do with a lot of different things, including past. There are a lot of past things that we talk. This is very inclusive. We included everything, and that's pretty well set. Yeah, please.
Yeah, Mr. President, the 10% baseline tariff remaining in place, is that a template for these future trade deals? You say you're going to keep it here.
No.
Is it going to stay in every case?
No, that's a low number. They made a good deal. Some will be much higher because they have massive trade surpluses, and in many cases they didn't treat us right. One thing with UK, they had somewhat closed, not like a China as an example, but they always treated us with great respect. So they treated us with great respect. The template of 10 is probably the lowest end. And therefore, they, made that deal. But they, we've had just a very special relationship with them. Like, I won't do that deal with cars. Unless somebody shows me that there's another kind of a car that's comparable to a Rolls Royce, then there aren't too many. This is a good commercial for Rolls Royce. We're going to order a lot of cars.
Mr. President, I wonder whether you'd like to buy.
Well, the last time this happened,
I would be happy to suggest a discount, obviously a very modest discount. We have to protect our profit margins.
I've had many of them, actually. The last time that happened, I ended up buying a Tesla.
Mr. President. Mary Margaret Olahan with Daily Wire. I had a question about the UK deal today. I heard there was talk that part of the agreement would depend on whether the UK would respect free speech and freedom of religion. I know the VP is really interested in that, talked about that earlier this year. Was there any assurances that you guys got on that front?
You want to handle that?
Yeah, that was not part of the conversation. Our conversation was an economic conversation from start to finish, closed by the president yesterday. This was a business deal, open their markets, and also protect their workers, grow our markets, and help our workers.
This was about business religion. Business is sort of a semi-religion.